Welcome back, grade 12s. Yes, now we're actually looking at a debtors and a creditors reconciliation. What's the idea? The idea is to reconcile once again. Remember, when we're dealing with a debtor, we want to reconcile our debtors control account, which appears in my general ledger, with my debtors list, which appears in my debtors ledger. Remember, for every transaction recording where we are recording a transaction with a debtor, what you have to take into consideration is that there is a triple entry. Something strange I've said? You haven't heard it before? Well, allow me to explain. You've heard about the double entry in accounting. What about the triple entry? The triple entry is as follows. When dealing with a debtor or a creditor, there's a general ledger entry, which is the double entry. That means the debtor's control and sales, for example, if we sold on credit. But at the same time, there's a single entry in my debtor's ledger. So ideally, what happens is, what should happen at the end of the month is that my debtor's control account, which is a summary of all my debtors, it should reconcile with my debtor's ledger. Got that? Okay, so we're reconciling the debtor's control account with the debtor's ledger. As I said, all transactions, individual transactions for a debtor A matric, we will have an account for debtor A matric. So the individual entries are appearing in my debtor's ledger. Okay. At the end of the month, a copy of this is sent to the debtor. So the debtor knows exactly. Listen, this are the transactions that have transpired in this month, and this is what I'm owing, and this is what I need to pay. Then, when we are reconciling it at the end of the month, remember, we will prepare a debtors list. Now, what is a debtors list? A debtors list is the final balances of every debtor that appears in my debtors ledger. So, for example, if you have 5 debtors, individual debtors in your debtors ledger, you add up the 5 amounts, and that is what you will call a debtors list. Now, that needs to be the same as my debtors control. You're right. So therefore, you can see the need for a debtors reconciliation statement. Now, like we said in the bank recon, there are bound to be differences. They are bound to be not the same. Well, if it happens to be the same, brilliant. But if it doesn't, it's not the end of the world. We will have to reconcile the differences. Now, a creditor or a debtor, and I'm going to use the term interchangeably because I'm dealing with the entire section. A debtor or a creditor may have prepared the statement on a different date from which date the business receives the statement. For example, you sent your debtor's account to your debtor on the 25th, and the debtor prepares his or her account on the 30th. Obviously, there's going to be differences. Obviously, and this is what we call a timing difference. It's possible that an invoice may be omitted or entered incorrectly. It can happen, guys. We all make mistakes. And if this happens, then we need to correct the mistake. Right. It's possible that a credit note or a debit note is omitted or entered incorrectly. So look at all of these. These are the reasons why the control accounts, or there will not be agreement between all that we have mentioned. Another reason, the payments may be recorded separately or incorrectly. This can happen. There could be a transcription error. Remember, when we are doing all these transactions, the human element is there, and obviously there can be a mistake. Certainly, arithmetical errors happens all the time. What is important is we need to know and how to correct these errors. Transactions may not be recorded. Happens all the time. Interest may have been charged and not taken into account. Okay, so keep this in mind when you're thinking reconciliation. What's the procedure? We compare the monthly statement against the creditor's ledger or the creditor's account. Remember, here we're talking specifically about a creditor. Then the debit column of one statement is compared to the credit of the ledger account. Obviously, guys, remember the relationship is that of debtor and creditor, and at all times take into consideration that yes, that person owes us money, that person is our debtor, but that person will say that we are owing money to that business, so we become a creditor. So understand the relationship between your debtor and your creditor. Okay, doke. Now, if there are errors or omissions, they need to be corrected as soon as possible. Very important, guys. Whenever an error is detected or an omission is detected, it needs to be corrected ASAP. If the creditor makes the errors, these need to be corrected as well. So there's communication between us and our debtors and our creditors. Okay, so we're getting to the real stuff. So if you want to be with the real stuff, stay with us. We'll be back with you in a while.